Hello, I'm John McCallum, and I'm here to talk to you about the Tax Cuts and Jobs Act and some of the provisions of that act that are of interest to small business owners in particular, and really any business in general. First, a little bit about myself. I'm a member at Grantham Pool, PLLC. We are CPAs and professionals providing tax, accounting, and advisory services with offices in Ridgeland and Oxford, Mississippi. If you have any questions about any of the material that I cover today, feel free to give us a call. I'm going to put my contact information on the last slide, and we look forward to hearing from you. Before we get too far along on this presentation, just wanted to put this out there. This is not really intended to be advice specific to any company or taxpayer. So just remember that you really need to talk to your tax professional and get them to analyze your specific situation to see how the law is going to apply to you. A brief summary of some of the things I'm going to talk about this morning. The new law lowers the corporate tax rate to 21%, and that's just a flat rate now. We also have the 20% deduction of pass-through income. You've heard a lot about that in the news, although it's a little bit unclear what that means for a lot of folks. We'll try to clarify that to some extent. And that's the understanding of that is probably going to be evolving a little bit over time. There's going to be some changes to depreciation in Section 179 expensing. There's going to be changes in how net operating losses are carried back or forward. Actually, the carryback is going to be repealed in most instances. It's going to eliminate the domestic production activities deduction. It's going to eliminate the corporate alternative minimum tax. And there's going to be a little bit of change in the way we treat research and development costs beginning in 2022. The pass-through income deduction. What this is that 20% of pass-through income from qualified businesses is going to be deductible on the individual level. Of course, pass-through income refers to that income that is received through partnerships, LLCs, or S corporations, but this also applies to solely owned businesses that are reported on a Schedule C. So this could be of great benefit to business owners that have their business set up in that type of an entity. Effectively, you will pay tax on 80% of that pass-through income. But there are limitations. We need to be aware of that. There are also some pretty complicated rules you need to think about. There are some planning points to consider. Do you want to change the type of entity that you are running your business in? Do you want to continue to be a pass-through, or should you be a C Corp? Because remember, the C Corp tax rates have been reduced generally. So proceed with caution and do some analysis, talk to your tax advisor again, and see what might be best for you. We have some changes to Section 179 expensing and depreciation with the new law. Some things we need to think about. Beginning January 1, 2018, the Section 179 expensing is increased to $1 million, meaning you get that direct write-off of $1 million worth of equipment. Section 179 has been around for many, many years. This just enhances it, makes it a greater amount. It also expands the threshold over which you aren't able to take 179. So this is a good thing for most businesses that you will be able to write off the cost of those items. It also expands the definition of what property is actually eligible for Section 179. For example, such property as roofs, heating, ventilation, air conditioning equipment, fire and alarm systems. Those things previously were not able to be written off as 179 assets, but they are now. Something else that changes is the bonus depreciation rules. We've had bonus depreciation since around 2001. That's always been part of various economic stimulus packages that have come out. It has varied from a 30% to 50% bonus, depending on what year the asset was placed in service. Generally available to assets with a shorter depreciation lives of 20 years or less than 20 years. So that has now been expanded. So now you get 100% bonus depreciation, and that goes through 2022, and then that kind of ratchets down by about 20% each year thereafter. But this is something that should help a lot of folks. Also, in the past, bonus depreciation was only available on new assets, what we call the original use provision. That is no longer there, so now if you buy used equipment, bonus depreciation could apply. This is something to think about if you build or buy a building and place it in service. Whatever you're able to segregate by use of a cost segregation study, whatever you're able to segregate to short-lived assets would be eligible for bonus depreciation. So this is something to think about. If you're able to segregate those assets and take 100% depreciation on them, that's going to be a pretty big write-off on the year of acquisition on that property. A little bit about the research and experimentation costs. There's been a little bit of a change there, and not a really big change, but I mentioned this really because of what it does not do. What it does is it requires that you write off research and experimentation costs over a 5-year period. You amortize and write them off, and that'll begin in 2022. Again, I mention this because of what it does not do. It does not change the R&D credit. The research and development credit is still around, and it's actually probably enhanced because of the repeal of the corporate AMT. The corporate AMT a lot of times would keep some businesses from being able to take advantage of the R&D credit that they would otherwise be entitled to. So that may be enhanced a little bit, so you may want to take a look and see if you're eligible to take the credit. There are some firms that specialize in helping you determine if and how much of a credit you may be entitled to. So keep an eye out on that. A couple of other items to mention here. The beer tax. The beer tax was lowered from $7 to $3.50 per barrel on the first 60,000 barrels of production, which is a really good thing for the craft brewers, which is a growing industry in Mississippi. They've, of course, had some state law changes recently to help that industry out, so this should be a really good boost for that industry. The next thing, the domestic production activities deduction has been repealed with this act. And this is something that if you're in manufacturing, you have been able to most likely take advantage of that deduction over the last several years, and you won't have that anymore. So be aware of that. We've also had some changes in the net operating loss, carry forward and carry back rules. There will, in most instances, be no carryback of NOLs in the future, but you will be able to carry those forward, although those rules have been revised as well. So be advised and be on the lookout for that. So what do you do next? Keep an eye out for more articles and presentations. More information is going to be coming out on this every day. I'm learning more every day that passes. You're going to have some technical corrections. Congress is going to have to clear up some inconsistencies in the law. There's going to be some rulings coming from the IRS. They really haven't gotten their hands on this yet, and various interpretations will have to be made. Also, meet with your tax advisor. Meet with us. My contact information is on the next slide. Give us a call. We can help you figure out what to do next. What's going to be the best path forward for you. Everybody's individual situation is different, and that's the kind of thing we need to analyze. And that about does it for this presentation. Um, I want to thank you. Thank you for listening, and thank you for your attention. This was not an all-inclusive presentation by any means. Obviously, this was just a tip of the iceberg. This is a very far-reaching law, and you do need to seek some advice on how to move forward. And we're here for you if you need us. My contact information is there on the slide, so don't hesitate to call. If you've got anything else that I did not cover that you might want to talk about, just let me know. Again, thank you and have a good day.